Hello traders, Steven Raupan here, founder of Master the Markets Elite Traders Conference and the Traders Open Day. So as you can see over here, we are in two positions at the moment. We can see that we are in the dollar Swiss, which is just under 500 pounds up, and the euro dollar is just under 200 pounds up. Dollar Swiss has been in it for 2 days, euro dollar has been for 1 day. In this particular strategy, we are looking to capture the waves, okay, the waves in the market. So tentatively, we will be actually looking to hold on to trades for a couple of days, and usually the maximum number of days we're really looking at is about 8 to 10 days. Okay, that's all we would be in a trade for. Now let me show you actually what this strategy is all about. As you can see, this whole strategy, as I've just mentioned, let me just expand one of the charts and I can just explain to you much more clearly. So the whole strategy over here, all it's based on, it's riding a wave. It's swing trading, as we may call it. Okay, swing trading, capturing the swing, or you may call it capturing the wave. Now traders, pay attention here. In one cycle, as you may know, like I always tell the beginner traders in Traders Base Scam, our beginner/intermediate workshop, we tell people that whenever you're looking for an uptrend, look for the letter N. Look for the letter N, because the N that we are looking for has got one high and two lows. So one low, one high, and then it's got another higher low, right? So that's what we are looking for. So if you get two ends in a row, then you got higher highs and higher lows. So that's the first point in this strategy. So we are looking at waves, and we are looking to only trade phase one of the cycle, because one cycle, as you can see, traders, is made up of two phases. So let me draw over here again. You can see in this N, there's one which is going up and another one which is coming down, the retracement phase, the pullback, as we may call it. Now the one that is moving forward upwards in line with the trend, we call it phase one, and the one which goes against the trend, we call it phase two. Now in terms of that, as swing traders, we usually only look to capture phase one, which is in line with the trend-based trading. In phase one of the cycle, we look to capture X percentage of the phase. Now, I want you all to take this as homework and find out what that X percentage is. What percentage of the phase one do we look to capture? Okay, so this is all just based on purely price, and you got the leverage from research done from other traders. And as you know, in Master the Markets, one of the unique points about us is that all the strategies that we trade are research backed with valid statistics. Okay, these are very critical for scaling and reproducing your strategy. Okay, right, so I want you to go and find out what would the objective be in a swing trading strategy in terms of how much percentage should you be capturing in phase one of that strategy. Okay, right, now the next thing that you do need to understand in swing trading especially is that when you're looking to capture this phase one or this phase two and looking for higher highs and higher lows, what is so critical, traders, which is what 98% of traders do not have, and that is why they do not make money at all from trading, is that they do not know how to quantify the highs and the lows, which we call as, in technical terms, the swing highs and the swing lows of the cycle. They do not know how to quantify that. Okay, And that is so critical, because without the swing highs and swing lows quantified, you won't be objectively be able to say that it's a higher high and a higher low, right? So in a classroom of 100 people, if I were to ask them, is this a high, is this a low, or is this a high, or is this a low, everybody will have different answers, okay? And especially in parts like this of the cycle where it gets a bit more choppy, you start to ask yourself, is this a high or is this a low? Is this a high or is this a high? Or is this a low? You start to ask that, and when doubts creep in, and that is when you lose your confidence in holding on to a trade and letting it run to your profits, or cutting it short and minimizing your losses. Because the one last thing that you ever want is hold on to a losing trade and it becoming a big loss. Okay, that is one thing that we as traders, professional traders, want to totally avoid. So the second point in swing trading, as I said, is to quantify the swing highs and lows. And the final thing, which is one that I want you to look into, which actually most traders won't know as well, 99% of traders won't know, which is in swing trading, whichever signal that you may use to quantify your swing highs and swing lows, whichever signal that you may use to quantify your swing highs and swing lows, there might be so many signals out there, which actually the signals itself, they're very few in nature, because nobody knows how to quantify that just based on price. Okay, not many people know how to quantify, just to quantify swing highs and swing lows just based on price. Okay, now if you were to find, let's say, those signals which quantify by price, let's say you have found 2 or 3 or 5 indicators which can quantify swing high and swing lows based on price alone, then what you need to do is to compare those signals, and you have to compare those signals and see which signal is better to get you the maximum amount of profitability. Then the way to do that is to compare between the signals, what we call open equity. Okay, open equity. Okay, and I want you all to research into that, what that really means, and study into that, because that will definitely change the game in which you are playing and trading as well. Okay, open equity. Now just to recap, you can see that currently right now our positions are still going up, but do remember, I just want to mention that these are all still unrealized profits. Okay, they're not still money banked in yet, so we just let them run through. Okay, we'll be updating these positions to you as we go along into the week. Currently right now we're just under 700 pounds up. Remember, this is all passive and totally risk managed as well, so reduces your risk as well with all our stop loss over here, and all the amount of money that we are meant to be risking is all identified. Right, now the final thing I want to say is a recap. The recap one I just want to mention to you is the 3 points what we went through today, and a bit of homework for you all as well. Now the 3 points what I want you all to take a look into. The first thing is the swing trading itself is made up of waves, right? Made up of waves, or swings if you call them. And the waves itself is segregated into phase 1 and phase 2. As trend-based traders, you look into trading the phase 1, okay, phase 1 of the wave. The second thing is that when you look at quantifying these swings, look into quantifying the swings, because without quantification you won't be able to know whether it's a higher high or a higher low, okay, or in another way, lower high or a lower low. You won't be able to quantify all of this. You won't be able to know whether it's a lower high, lower low without quantification of the swings. Okay, so you need to know. The second point is quantification of the swings. And the final thing is, which I mentioned, is whichever indicator that you may use, whichever signal point you may use to measure the swing highs and swing lows, you do need to compare between which is better according to what we call the open equity that is being produced by that signal. Okay, over here, master the markets, we use the smart money indicator. Let me just put it on over here on your screen. Just give me a minute. Okay, so over here I've got the smart money indicator over here, and I'm just going to put it on. And once you put it on over here, as you can see, once I've put the smart money indicator on, as you can see from the arrows over here, from the up and down arrows, the subjectivity and the doubt of whether there's a swing high, swing low is totally eradicated. Some of you are taught that this is a swing high or this is a swing low. See, all that is totally eradicated by the quantification. But do remember that you can measure. For you, some of you might get doubts of whether is this a good indicator or not, and for you to quantitatively assess yourself for whichever indicator you may be using for measuring a swing high and swing lows is this important word called open equity. And I want you all to go and research into that and find out what it all means. And the next homework that you also had in this video is to go and find out the X percentage of the phase 1 move that you're meant to capture. Okay, I guess that's me from this video, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.